Imagine you have a friend named Bob who's obsessed with buying umbrellas even though he lives in a desert where it almost never rains. Bob's umbrella collection keeps growing and keeps buying more even when there's no rain in sight. And not only that, but all of Bob's billionaire friends are all buying umbrellas. Is Bob and his billionaire friends all crazy? Or do they know something you don't? Now, this video is not about umbrellas, but it is about the 20-year Treasury Bond ETF, ticker symbol TLT, and why hedge fund managers and banks such as Bank of America, Morgan Stanley, and Fidelity are all pouring into TLTs with inflows of $1.4 billion in just this past week and $17.2 billion in total inflows year to date, where at the same time, typical safe havens such as gold ETFs are seeing outflows. Hello and welcome to Ucash Finance, and yes, that is my real name. If you enjoy financial content like this, make sure to hit the like and subscribe button. It really helps out the channel and motivates me to make more videos like these. So TLT is BlackRock's 20-year Treasury Bond ETF that basically allows you to buy a diversified portfolio of long-term US government bonds and pays you a yield depending on what interest rates are. And more importantly, it is a useful indicator that tells us about investor confidence when it comes to stocks, Bitcoin, mortgage rates, and the broader economy. Before delving into the extent of TLT's acquisition by Bank of America and Morgan Stanley, it is essential to understand two key points of TLT. First, TLT's price movement has an inverse relationship with long-term interest rates. When TLT price declines, as they have recently, long-term yields or the return on interest rates tend to increase. And the reverse is also true. The relationship is important for the Federal Reserve and Chairman Jerome Powell because controlling inflation requires raising interest rates, which impact the value of TLT, which you can see here has been drastically going down since the Fed started increasing interest rates in March 2022. The second important thing about TLT is that it is a safe haven asset that investors rush to during times of economic uncertainty because the yields are paid by the US government, which has never defaulted on its interest payments. So when investors rush to treasury bonds, this drives up the demand for TLT, increasing its price and lowering its yield. Conversely, with good economic conditions, investors shift away from TLT in search of a higher return, causing TLT prices to fall due to lack of demand, and yields on TLT rise. We can see this in the last 12 months or so. Even though the Fed was increasing interest rates, the stock market was crushing it. While on the other hand, TLT is making new lows months over month with a new 52-week low just today. But the real question is, if TLT is doing so bad, why are the banks and hedge funds rushing into TLT? Bank of America, for example, is the largest holder of TLT with 39,530,000 shares valued more than $3 billion, and Morgan Stanley holding 32,960,000 shares. Well, the easy answer might be for you to say yield generation, and I wouldn't blame you. If we take the current TLT yield of 3.76% and divide that by how much money Bank of America has invested, we get an annual interest payment of $126,650,000. Now, that's an insane amount of money, but the real reason why Bank of America and other banks and hedge funds are invested in TLT is that they are worried about a recession. That's right, let me say it again. Bank of America is worried about a recession, even though they might release articles that say soft landing, no recession, Bank of America now predicts, Or imagine no recession. It's easy for you to try. Bank of America flip-flops on its recession call, arguing a soft landing is on the way. But the truth of the matter is, when investors are worried about a recession, they invest into safe assets such as bonds and sell off riskier assets such as energy, commercial real estate, and definitely no emerging markets. Case in point, Bank of America says clients are selling energy stocks, sector remains historically cheap. Or how about this one? US banks prepare for losses in rush for commercial property exit. Or maybe this one, Bank of America sees stocks going nowhere in 2023. I think you get the point, but it's important to be able to separate what these billion-dollar hedge funds are putting in these headline articles versus what they are actually doing in their portfolio. Look at this CNBC headline, for example. Here's what America's top CEO are saying about a possible recession in 2023. CEOs from JP Morgan, General Motors, Walmart, United, and Union Pacific are preparing for an economic slowdown. And this article was released on December 6th, 2022. But if you ignored the headlines and bought stocks the same day, you could have bought Meta for $114 and gained a 100% profit in 6 months. Or you could have bought Google for $92 and could have made a 50% gain in 6 months. Or better yet, you could have bought Bitcoin for $17,000 and made over 100% gain in 6 months. And all of these I would categorize as blue chip or safe investments, generally speaking. So, as Nathan Rothschild, a 19th century British financier and member of the Rothschild banking family, said, "The time to buy is when there's blood in the streets." At the end of the day, no one knows what the stock market will do. It can go up, down, left, right.
Nobody knows if the stock is going to go up, down, sideways.
But what never fails is buying great companies and assets at low prices when everyone else is scared to buy them, and hold them for the long term and sell them in the next bull market when it comes. If you found value in this video, make sure to like and subscribe. It really helps out the channel. Thank you very much, and I will see you in the next one.